It's not trading or an investment idea. So before making any decision based on the information shared, please check with your financial advisor. Now, coming to the market performance in complete contrast to what we saw last week, market showed resilience, market showed strength. If you remember that 21,800 was the make or break area that we have shared last time, Nifty made a low at 21,800 and recovered swiftly to gain nearly 2%. Sensex nearly 1.5%. So the key support worked out in the favor for the markets, and it was a broad-based participation, as you can see from the sectoral front also. So FMCG took a breather, but the rest of the sectors like realty, metal, energy, media, financial services, they've all contributed to the gains and ended in the green. So it was a broad participation. Market breadth also improved in comparison to what we were seeing it earlier. So the mid cap and small cap, they've also managed to show decent traction. In fact, the mid cap index made a new record high as well. So all in all, it was a strong week in comparison to what we saw the week earlier, a decisive negative close to I'll not say a very strong close, but yeah, a decent close on the week-on-week basis. Now, talking about the top 5 gainers from the Nifty 50 basket across sectors, you can see M&M topping the list, post numbers, a very strong move. Then a couple of names, the Adani group of stocks, Adani Enterprise and Ports, which recovered very swiftly. Then metals, JSW Steel, and lastly L&T, which tested the major support of long-term moving averages and then rebounded. At the same time, on the losing side, we have a couple of names from the auto pack, Tata Motors and Bajaj Auto. They were under pressure, especially Tata Motors lost nearly 9% after the result. Then we have a couple of names from the FMCG basket also, which witnessed profit taking like Nestle, HUL, and lastly, Dr. Reddy's from the pharma bag. So it's kind of like a mixed bag, means the defensives which were on the front foot last week, they witnessed some profit taking, and the aggressive ones, they took a front seat and inched strongly in the passing week. Now, what is our anticipation for the next week? In fact, we have a special session, as I reminded you all during the last presentation itself, that tomorrow is going to be a special session for the exchanges, and we'll have market till 12:30 with 2 slots, different slots for the normal trading. So of course, even during that period, we'll see market witnessing moves. But broadly, when we plan for a week, obviously we are talking about slightly longer duration. So I feel that the discussion that we're going to have right now is likely to stay valid till next Friday. So this is the daily graph of Nifty index, and if you can recall, we were here, after the decline from, sharp decline from this, rising channel. And what we shared is that this area, 21,800, is the make or break zone. If Nifty manages to hold, so there could be a bit of a recovery, and that is what we are seeing right now. So means we have re-entered into this channel. So this is one positive. Another, that we upheld the support, but the momentum, the decisiveness is missing. Means we are not seeing 1%, 2% kind of a single day move, or Nifty, opening at the day low and ending around the day's high. So it's gradual up move that we are seeing. Why? Because the key contributor, banking, till yesterday, they were slightly on the back foot. Why? Because the private banking majors, we'll discuss in the next slide, but the private banking majors were witnessing mixed swings. So that's the reason why we were not seeing any momentum. But at the same time, selects heavyweight from the other sectors. Like yesterday, it was IT. Prior to that, we had, the other names from capital good baskets and auto basket, which were helping the index. So barring IT, banking and financials, rest of the pack on the rotational basis were holding strong. So, and that's the reason why we are seeing gradual recovery in the markets. What happened yesterday, that we could manage to reclaim the short-term moving average also. This faded yellow line that you can see on the screen around 22,300. So we were eyeing that as a critical hurdle. So we could manage to surpass the same. And today also we ended, firmly above this mark. So what it indicates is that as of now, indications are in the favor, considering the overall tone, that we might inch further upward in days to come. But until we see some decisiveness or momentum in the banking and the alignment with the Nifty, the momentum is likely to be on a back foot. So couple of factors like participation of banking financials, one, and the continuous buoyancy that we are seeing in the global market. That is also going to be a critical factor to watch out for. Just to add to what we shared about the global indices, the US market, the Dow Jones Industrial Average, which is a key benchmark, tested a new milestone of 40,000 in the last trading session. So US markets are definitely showing noticeable resilience, and we have other markets also which are holding strong. So that factor, if we are not seeing any selling pressure globally, then chances of our markets witnessing a complete contrast move seems low. So this is something which is a comforting factor for us, but without banking, as we have discussed earlier, it's going to be difficult to see any momentum. So gradually, where we can inch this zone closer to around this, the highs were around this 22,800, but we feel that this closing basis hurdle close to around 22,700 will be the first hurdle for the index, and then 22,900. So these are the two key resistance area that market will be eyeing next week. On the downside, 22,000, the immediate support, but major again, it would remain at 21,800, the previous window. So as of now, we are sitting in the middle. The ideal approach is to maintain stock-specific view, focus on the themes or sectors which are showing strength. So barring, I guess, media, rest of the other sectors, they are largely contributing on the rotational basis. So one can continue to look for the outperformers or the consistent performers. But if you talk about the best performing sectors, then auto, metal, these are the two which are showing noticeable strength and participation as well. Now let's talk about banking. Daily graph of banking, and last time we discussed about that. Earlier we were anticipating the outperformance in banking, but that move post this cut below this decisive strong candle on the daily chart, the tone subsided, and still we are seeing this decline pressurizing the index on every rise. But in today's session, we could manage to surpass this short-term moving average hurdle around 48,100, but it's not a very decisive close. So we need to see whether we manage to sustain these levels for further up move towards 48,500 and 49,200 zone in coming days. What is important to watch out for in banking is barring ICICI, Axis, and SBI. There's no other private bank or PSU which is showing decisiveness in their trend. So we need participation, a sustainability in HDFC, Kotak, IndusInd Bank. Though Kotak has rebounded very swiftly of late, but HDFC is somewhat still hovering in a band. IndusInd Bank, on the other hand, is still trading under pressure. So We need to see whether the Axis, ICICI, and SBI, this top three names, are going to dictate the trend from here on, or whether the others are also going to contribute to the move. But as of now, one needs to restrict their position to the top performing name or stocks which are holding strong closer to the record highs. Coming to the downside support area 47,300 to 46,600, that will be the area of strong support for the banking index. So in case if there will be a dip, we might again see some buying emerging. Stock preference we have already discussed. Now let's talk about individual stocks which should be on your radar for the next week. The first that we have on the list is BPCL. So OMCs are showing a different kind of resilience. Means on good day or bad day, they are just spending time in a range. But the good part is that they are still holding above the major averages. This is the weekly graph, but on the daily graph also we'll see that majority of these stocks, barring IOC, both HPCL and BPCL, they are holding very strongly. So we feel it's again extended consolidation for BPCL, HPCL largely, and they're likely to resume the uptrend soon. So this is one pack where one can look for fresh accumulation for much higher levels in coming week. Next on the list is IRCTC. So IRCTC, a decisive consolidation range break, as you can see on your screen, that the stock was trading in a range for almost 1.5 months, and now we have seen a decisive weekly close this week with decent volumes. So we expect this consolidation to end and the stock to inch toward the previous high, which is around 1250 or higher. So IRCTC is one stock which looks strong for accumulation. Lastly on the list, overall reality. So it's a self-explanatory chart. Means this strong weekly close, almost 18% kind of a gains. Look at the volumes. So it's again a major consolidation and with sharp surge in the price and volume. So this clearly indicates a decisive breakout. And as per this range, the stock has an upside potential towards this 1980 to 2050 in the near future. So this could be one candidate which one can look for accumulation on dips with a positional point of view. So just to sum it up, though markets have recovered strongly this week, but momentum is missing. Why momentum is missing? Because banking is not participating the way it should be. But sustainability in global markets, that is playing a crucial role. Broader indices, they are also showing strength. So put together, it's a overall positive market, but the move is going to be gradual, is what the indications are. So the focus should be more on accumulating quality names on dips. So it's a buy on dip market in short. Upside, we talked about 22,700 being the strong hurdle for the index, and downside 22,000, 21,800. That will be the area of support. Banking, mixed trend within the private banking majors is capping the momentum. So the focus should be more on the top three names like Axis, ICICI, and SBI if somebody is looking for long trades. On the stock specific front, we talked about three names. The first on the list was BPCL from the OMC basket, IRCTC from the railways, and overall reality from the reality pack, which one can consider for accumulation. So this is all from the presentation part, and we'll have a quick feedback poll now. So please fill in your feedback and then you can start posting your questions using that Q&A tab. And in case if you don't have any question, you can mention which any particular topic that you would like to hear from us in the coming webinars. Apart from what we regularly do, we talk about market views and all. Anything specific? So obviously you can mention that using that Q&A tab, and we'll make a note. And future webinars, we'll definitely plan some. So please quickly fill your feedback so that we can start with the Q&A. And once you are done, you can start posting your question using that Q&A tab. All right, so let's start with Q&A now. Okay, so first question we have from Nirmala Devi ji regarding fertilizer and chemical space. So see, this space is not showing sign of decisiveness. So earlier we have had you know, some rebound in fertilizer names and some of these chemical stock as well, means the agrochemical space, but they lack sustainability. So among the fertilizer space, Chambal fertilizer have had a very strong move, but it retraced equally swiftly as with the market correction. So now we feel that one needs to be very selective in this space. So as of now, I can't recall any name which should be on your radar. Like today we had a couple of names from the chemical space, like if I'm not wrong, Tata Chemical is also holding strong, but there are like very limited stocks wherein we are seeing consistency in the trend. So I feel that for a time being now, until we see decisive move for a week or two, one should avoid both fertilizer or chemical space. Okay, next we have question from Swati Mandal. What are your views for FMCG and IT in the next week? So yes, see, both these sectors, they did pretty well a week before, and now we feel that after this pause, IT majors and select stock from the FMCG basket, they'll continue with their overall positive tone. So from the IT majors, Infosys, HCL Tech, they are the comparatively better structure. Then we have Britannia, Marico, Imami, and HUL to some extent from the FMCG space, which one can keep on radar. Okay, so we've already discussed about chemical space, Nehash, so hope it answers to your query. And okay, sure, Mr. Yogendra will. So we do, multiple trainings on option trading. So do keep a close watch on our social channels at Religare Broking, and we post, regular training programs for option trading as well. So you can register yourself accordingly. Okay, Mr. Vikas Shahu has stock-specific questions. So we have already answered Mr. Shahu that in the FMCG space we see potential from the current levels also, but selective participation now, because some of the stock they have already done well, and now we are seeing some profit taking. So Colgate was doing exceptionally well within the FMCG pack, but now we are seeing profit taking. So Marico, Britannia, Imami, these are the better candidates that one can consider. Okay. So, we've discussed about banking in general, so stock specific query again. So, as we've discussed, preference should be given to the top three names: Axis, ICICI, and SBI. If you try and you know look for opportunities in the other space, at least for a time being now, if the view is, let's say, for a week or 10 days, I doubt that there'll be any meaningful reversal which could happen in the other names. So as of now, the preference should be given to top three alongside with Federal Bank, which is also trading closer to its record highs. Okay, IT sector, we have already discussed that IT majors is something that one can prefer, and but invest gradually. Don't look for a very aggressive bet in the IT, because we are seeing sign of short-term reversal, but it's not confirmed yet. So Mr. Rajesh Lal has a question that the need of tomorrow's special session. So actually the exchange has this DR site, disaster recovery site, means if you operate at some location and you have all your systems and things at one place, what if something goes wrong in that area? So how you can assure the continuity of your work? This is called disaster recovery plan, and they're going to test this. So first half of the trading is going to be from their normal location, and second half from the planned site. So they did it earlier also, and this is the second attempt that they are planning. Okay, so Mr. Yogesh, see, if you are new to the stock markets, I would recommend not to go ahead right away with the stocks, and even if you are planning, then stick with the heavyweights, means the blue chip counters. So what all stocks fall in these categories, which are Nifty 50 counters. So the Nifty index is a mixture of top 50 names by the free float market capitalization. So look at the stocks which are part of the Nifty 50 universe within the sectors that you prefer to invest in. So like banking, top names: Axis, ICICI, HDFC, Kotak, FMCG, ITC, HUL, Dabur. These are the top names. So which one can consider investing with the long-term view if you are new to the market. So tomorrow's timing, okay, so I'll just share the exact timing. So it's 9:15 to 10 a.m. is going to be the first session, and the next is going to be from 11:30 to 12:30. Okay. Okay, what is next? Defense. Mr. Naga has question. What about the defense sector outlook? So you must have noticed, Mr. Naga, that the defense stocks are again witnessing momentum after a period of lull. So we feel that anyways, we have discussed earlier also regarding the defense that it's not a sector to look for a week or two. If your time horizon is let's say for 1 year, 2 years, one can continue to look for consolidation or a pause as an opportunity to accumulate. So we have had this kind of a phase earlier where HAL, BEL, BDL, BHEL, they all were sitting on the sidelines. And again, post results, we have started seeing traction again. So after this strong up move, I feel that one should not look for short-term entry after this up move. But yes, if your time horizon is, let's say, for 1 or 2 years, one can continue to look selectively for investment in the defense space. Okay, next question from Swati again, that why FIs are continuously selling huge amount every day, past 3 weeks, may they've sold any. So, specific reason could be multiple when it comes to FIs, because we are into the general election, so they want clarity, you know, first before making any decisive investment for the coming years. Second, the outperformance of the global markets, as like I've shared during the presentation itself that the US market had made a new record high. So if your markets are doing comparatively well, then it's a natural inclination that you invest in your own markets instead of looking outside. So there are multiple reasons. So these are the top two reasons which I feel, which is causing this pull out of the FI's money in recent weeks. Okay, Dr. Urbi, so as we've discussed about the OMC stocks in the presentation itself, our view is positive for both BPCL and HPCL. IOC is something that might continue to trade laggard based on their recent price performance. But if we talk about from the long-term point of view, it's also fine. But our preference is BPCL among the all three names. Okay, so yes, there's a attendee who have asked that is Monday a holiday? So yes, markets are closed on Monday due to election in Mumbai. So yes, we are going to have a truncated week next week. Okay, pharma sector, again from Nirmala Devi ji, that as a sector, I feel that the stock sector has more legs, when it comes to overall performance. But we are seeing mixed trend within the sector, and it's normal during the earnings season. So I feel that one should focus on stock-specific approach instead of sector-specific approach in pharma. Okay, so we have done with most of the index related queries. Some of the stock queries also we've answered. The last, we have one question on power related stocks. So see, power as a basket is doing well, but the PSU power stocks, especially the PFC, REC, they have done pretty well. So in case if the other stocks are not moving in tandem with what we used to see earlier, so there could be underperformance in the future also. So if you are still holding those names, you may consider exiting and switching to the performers which are trading in sync with the market. So yeah, with this we have answered all the queries. Thank you everyone for participating. Next week. Next week is going to be a normal week. Yes, so we'll connect again on 24th, same time. So till then, thank you. Take care.